The Boise housing market has slowed down a bit over the past couple months, so I have all the facts and the figures for you in this housing market update. And then at the end of the video, I wanted to share a personal note on why it's been a couple months or so since I've published a video. And it actually has to do with real estate, so stick around for that if you're interested. But first, let me get into the numbers. So the last month, August of 2024, the median here in Ada County was $536,655. Now, that's actually a decrease of about 1.5% from the month before, about $8,000 or so dollars. July of 2024, the median was $545,000, but year over year, we're actually still in the green. We're up about 3.2%, which honestly, that's about where you want to be for house prices. Now, I know over the past couple years, we've seen equities go up by 15, 18, 20%, and that really makes you feel good as a homeowner. You feel like you're making a lot of money. The fact is that doesn't actually really help anybody. If you go to sell your house, you still gotta buy another house. So unless you're actually moving out of the area to a market that is much lower than you, all of that gained equity really doesn't amount to that much, doesn't really mean that much for you. 3 to 5% is really where you wanna be because that's the price that wages can keep up with, and it doesn't jack prices up like we've seen in the past couple years. So really that's about the target number that we wanna be at. So let's see if that continues to, if that trend continues on in the coming years. The number of homes sold last month was 724. Now, year over year, that's also an increase of about 7%. But as I'll show you in the next slide, that number actually is lower than pre-pandemic levels. So we're not actually quite back to where we were before the whole housing market crazy that we saw over the past 3 years or so. The month supply of inventory is interesting. It's been going up slowly since the beginning of this year. So in January of 2024, we had 1.68 months supply of inventory on market. Now remember, the month supply of inventory is the amount of time that it would take to sell the homes that are currently listed. So it would take about, in January, it was about 1.68 months. Today, that number is up to 2.91 months. Now, a balanced market is anywhere between 4 to 6 months of inventory. So we're approaching a balanced market. The cards are still stacked in favor of buyers though. It still is, the advantage is a little bit to the seller, and I'll get into that in just a second. Let's break that number down a little bit more. As far as existing homes are concerned, the median last month was $525,000, so it went down about almost 3%, 2.78%. Year over year, about 3% increase. So this about the same as the total overall, both existing and new home average year over year median. So that's kind of the sweet spot. That's a good number that we want to be at. Now, it's quicker to sell an existing home than it is a new home. So the average day on market for existing homes in Ada County is 30 days. Now, that number has gone up slightly over the past few months. As far as new construction is concerned, though, the average last month was $549,900, so $550,000. No change on that. Same as it was the month before that. Year over year, though, new homes are down slightly, almost 0.5 percentage point. And the average number of days that it takes to sell a new home is 57 days here in Ada County. Now, as far as Canyon County is concerned, the number's a little bit lower, as you know. The median was 410,384 last month. Now that went down again, also month over month. So it was about 3.4% decrease, about $14,000 less. Now again, you kind of want to zoom out. You don't want to put too much stock in any particular month because depending on which homes are sold that month, if you have a lot of expensive homes that are sold in 1 month, then that's going to raise the median and vice versa. So you really want to look at trends. You don't want to hone in on any specific month. But I think this illustrates the point that our market basically has flatlined over the past few months and maybe dipped slightly. Year over year in Canyon County, they're up about 1.3%. Now, the number of homes sold last month in Canyon County was 408, and that's down about 17%. So it's a dip of about 17% in sales in Canyon County, and the days on market there is higher than in Ada County. 50 on average takes about 50 days to sell your home there in Caldwell, Nampa, and further west. A little bit more supply on market, which is why the days on market is higher, 3.09 months. So to summarize all of that, we have seen a slower August overall in Ada and Canyon County. So basically the Treasure Valley. We've seen days on market increase slightly, up by about a day or two month over month. Month supply of inventory has slowly been increasing since the beginning of this year, and we've seen a little bit more listings. And that results in a decrease in the median, and sales are down as well compared to the pre-pandemic levels. Now, let me put those stats just in perspective for you so you can get a better feel for where exactly we are in the housing market today. Is September 20th, 2024. So as I said, the median was 536,000 just this past month. A year ago, August 2023, the median was 520,000. And then I skipped over the pandemic years because those were just crazy years where we saw prices go like this and then like that when the interest rate went up. So just before the start of the pandemic, August of 2019, the median here in Ada County was 355,000. So notice how that number has gone up by $200,000 in 5 years. That's a pretty massive increase. And a year before that, August of 2018, that number was at 334,000. But here's the interesting thing. Look at the number of homes sold. So last month, as I said, 724 homes sold here in Ada County. In August of 2019, so really that's kind of our baseline. August of 19, August of 18, that's where the housing market was more or less stable. We had about 30% more homes sold in August. So 1,048 in August of 2019, 1,100 in August of 2018. So we're down by about 35%. Not quite 33% or so as compared to pre-pandemic levels. Days on market are a little bit higher as well. 39 days just this past month versus 32 and 26 in August of 2019 and 18. And look at where the inventory is. 2.91 months of inventory just this past month versus 1.8, 1.78. Now, I have to say, in the Treasure Valley, we have seen a low supply of homes overall over the past really 10 years. So it's not a bad thing for us to get more supply on market. I think that will help to steady the housing market. And as I note here, this is the highest August month supply of inventory since 2015. So we're still not quite to a balanced market, which means we haven't really seen a balanced market here in the Treasure Valley since even prior to 2015. But we're headed in that direction. And I think this is all good news really for everybody, because what we want is we want a balanced market. We want prices to be stable. We don't want the craziness that we saw several years ago. So what's the upshot of all of this? If you are selling your home, because there is more inventory on the market, you got to make your house stand out. If you're selling a house for an entry-level home for $400,000 in Ada County, you got to make it stand out. You really have to shine it up, make it look good, because there's other homes that are going to be on the market. They're going to be competing with yours that may not look as well. So if you can just make your house just a cut above all of the other ones, you still can sell it for a good price. I had some clients very recently, a few weeks ago, purchase a home for $396, and we ended up offering full price for the house. And we tried to get some concessions. We ended up getting $500 in concessions at closing, and they fixed a couple electric things. So I say that in order to mention that the competition is still there. And the buyers still do have the slight advantage. The sellers still do have the slight advantage over the buyers. With the increase in inventory that we're seeing, though, this could be good for buyers, finally. And that is because there's some good news on the horizon, which you may have seen yourself. Inflation is coming down. Now, I know some of you guys are not going to like this, but it actually is coming down. Even though you probably don't like the person who caused the inflation, Joe Biden, but over the past year or so, we've seen it come down. In March of this year, it was at 3.5%, and it's come down about 1/10 of a percentage point or so every month. 3.5, 3.4, 3.3, 3.0. Just this past month, August, the inflation rate came in at 2.5%, which was very good news, and that's why the Fed decided to lower the interest rate. So they lowered it by 50 basis points, which has all been very good news for the mortgage market. There has been some relief in the interest rate. So I just talked to a lender today, and he said he's quoting people with good credit. They're putting about 20 or 25% down, which is kind of the upper tier of where you want to be to get the best rate. He's quoting buyers in that category at around 5.9 or in the high fives. So that's really good. If that's the case, then we are finally back to where we were 2 years ago. So 2022, we saw the interest rate go flying up, and it blew way past 6%, got all the way up to 8%. And so now it's finally come down to 6% or so, low sixes. I think Mortgage News Daily today's average was 6.09%. So with good credit and with a higher interest or a higher down payment, you're probably going to be in the high fives, as I just said. So all of that is good news, and I think this makes for a good outlook looking forward. So how does our market compare with the U.S. housing market in general? And the answer is it's actually very comparable. Just this past month, we saw a 20% or 21% year-over-year increase in listings. So what that means is more people are putting their houses on the market. And the reason they're doing that is because the interest rate is coming down. The lower the interest rate, the more motivated sellers are going to be to sell their house. Because most sellers are going to take on another mortgage. So they're going to exchange one mortgage for another, and most don't want to take on a higher payment just to have a better house. And because the interest rate has gone up so rapidly over the past year or so, a lot of people are locked in the high 2s, low 3s. So to trade a mortgage rate of 3.2% for 7.5%, that really takes some motivation for you to sell your house. That's a major life change. So that's why we've seen listings so low over the past year or so. But now that the interest rate is starting to creep down, we're seeing more listings across the United States as well. MSI has increased all over the U.S. also. This is not just in the Treasure Valley. And again, this is the 10th consecutive month that we've seen more inventory on market. But overall, we're still not to the pre-pandemic level. So still not to the supply that we were at nationally before COVID hit us in 2020. Now, the U.S. median is at $430,000, and that's down about 1.3% year over year. So here's where we are slightly different. Here in the Treasure Valley, our median is up 3 or so percent. Nationally, it's down about 1.3% year over year. But I expect that number to continue to rise as we see the interest rate come down. Now, overall, I thought this was interesting. Overall, this has been the slowest August in the past 5 years, which has been the case in Boise as well. The average days on market is 53 nationally, and that's 7 days more than we were last year, which is a pretty big increase. So to summarize all of that, we have seen a slowdown pretty much everywhere in the United States in August. And the reason is a lot of buyers have been waiting on the sidelines to wait for the mortgage rates to come down. Now here is a Realtor's prediction, Realtor.com's prediction. Again, nobody knows the future, but it's interesting to hear what other people think may happen. They say, we think the sharp decrease in mortgage rates seen in mid-August could lead to an increase in listings in the coming months as lower rates begin to entice the marginal homeowner to sell. However, we don't expect selling activity to rise in any significant way until next spring, when rates are likely to be much lower than the typical seasonal rise in inventory is upon us. So we shall see. We shall see if the rates will continue to drop at a steady pace leading into next spring. I think there's a good chance that we'll see them drop. I suspect we'll probably see them bounce up and down a little bit, but generally trend downward. And if that's the case, I think they're not too far off in their prediction. We probably will see a pretty big bump in buyer activity in the spring, especially if we're in the mid to lower fives next spring. So on a personal note, you're probably wondering, Benj, where you been over the past couple months? And I realize I have not been the best at publishing videos. And the reason is I've been super busy. I had my wife's family come to visit us at the beginning of the summer. So we spent 6 weeks hosting them and entertaining them, bringing them around to different places, in addition to working full time. But really after they left, I started another project that was really a huge project. Last winter, my roof began to leak. So I knew I needed to replace it. So I got a roofing company out to give me a bid. They quoted me $15,000 for the roof. And I thought to myself, pretty sure I can do it for cheaper than that. So I decided to just go for it on my own, replace the entire thing on my own. That's what I did. Bought all the materials. Took a month to replace the roof. Now, it wasn't a month of working on it full time. It really was, it worked out to be about 2 weeks worth of work because I had a week off here and then a week off there. And then I was buying and selling real estate as well. So I was just doing it with the time that I had. But I ended up saving about $8,000. And I would be interested to hear from you. Let me know in the comments below. Do you think that's worth it? Is it worth it to work for about 2 weeks to save $8,000? Definitely takes a toll on your body, but I was happy to save $8,000. I will say that I recommend if you need to replace a roof, definitely take the old shingles off before you put the new shingles on. That's what I did. It's a lot more work, but it's much better for your roof. I know Idaho code does allow two layers of shingles on your roof, but they're so heavy that those shingles put a lot of stress on your trusses. So if you don't take those off and you get a heavy snow, it's probably not the best thing for your roof. So I recommend taking the lower layer of shingles off if you have to replace your roof. The other project that I've been engaged in is I bought a house a little while ago that I'm remodeling with my brother. So that's been quite a project. Still a couple months out, but the plan is to remodel it and resell it. I'll have to let you know how that goes, but I have a good feeling about how it's going. So all of that has been in addition to my full-time job of buying and selling real estate. So I've been pretty busy lately, which is why I haven't been as consistent with publishing videos. But please reach out to me if you have any questions about real estate or about life in general here in Idaho. I would be more than happy to chat with you to see how I can help. As you leave, tap the like button, and I'll see you guys in the next one.